Hey guys, and welcome to the Working Money channel. So we got the crypto market here, 196.4 billion market cap. Moving a little lower, we are really trying to get out of this rut, but it's seeming that there's just not enough interest right now. It is December. Investors are preoccupied with getting out of positions for tax reasons, rebalancing their investments. Bitcoin right now trading at 72.26, Ethereum 144, and XRP 0.221. Everything down, but again, just by a little bit. Nothing too critical right now. And we can see here Bitcoin on the daily coming back into this zone here, hovering at that 7,000 roughly. Well, right now it's at 71.84, but 7,000 seems to be that difficult psychological number for Bitcoin to go any lower than. We had seen it wick down here on November 25th, came back up, but really haven't seen much seller interest for Bitcoin past that level. Now here we have Bakkt and how they broke records every single week since mid-October. This paints a different narrative. As you know, Bakkt was launched last fall and they have been posting records. So despite Bitcoin's price, we still know people are extremely interested in cryptocurrency investments. And by people, guys, I mean the big players, the ones who are using Bakkt, not the ones who are going on to Coinbase and flitting an extra $100-$200 into crypto. I'm talking about the real big fish. So, guys, I'll link this article in the description if you want to read it further. But I'll read you some of the highlights here. The Fear and Greed Index is now just on the edge of extreme fear as Bitcoin goes through another flat week. So, Fear and Greed Index. Guys, you know Warren Buffett's motto, be fearful when you see those who are greedy and greedy when you see those who are fearful. And right now, we're seeing extreme fear, and I feel like if that is the case, this is going to be the bottom, the $7,000 mark, maybe a little under that, but not by too much. You can see the next level of support below that gets us to in the $5,000 to $5,500 range. Don't know if we'll go down that low, but the fear index extremely high on Bakkt. So is the bottom in before another boom? Another point down here that I found kind of interesting, no trades have been done for the daily BTC futures contracts over the last 9 weeks. The report also touched upon Bitcoin's peer-to-peer market, and that has been showing steady, almost linear growth unaffected by price fluctuations over the past few years, notwithstanding that finding most exchanges were reported to be facilitating relatively low volumes compared to the peaks reached in 2017. So Bitcoin peer-to-peer action still growing steadily. Guys, that means crypto's not dead. People are accumulating. The big investors are buying Bitcoin, XRP, Ethereum, I'm sure, as well as other cryptocurrencies, OTC. It's not really affecting the price, and we're still early on in this cycle. Let's not forget too that we did see this meteoric uprise from Bitcoin back from I believe it was April 1st was the first day we saw that really start to pump. And then by June 26th, we had seen the peak. And now, guys, a bit of a retracement. And the larger the pump, the longer the retracement is going to be. Coming back down, settling at a price point where, buyers and sellers are going to agree upon a transaction. Anyway, I wanted to touch on this from the Daily Hodl. Analyst who bet early retirement on XRP says crypto asset facing pivotal moments. So this guy here, Eric Cho, says that we could see a tumble to 17 to 18 cents in the short term, okay? This guy, Eric Cho, who ranked first in Texas in the CME Group's annual trading competition in 2016, said in July that after paying off his debts and saving for emergency in some real estate, he decided to go all in on XRP. He says, I'm retiring if it reaches $2 to $4. So you can imagine how much money he has in here. So at the time, XRP was trading at 42 cents, and now it has dropped to 22 cents. He said that he would actually, he had placed actually a sell order at 28 cents. So who knows if he actually sold because it went below 28 cents. It seems to me that he probably did not, especially if he's placing so much of his net worth into XRP. Also the fact that he is still tweeting about his moves. In this tweet, bearish scenario for XRP, could we potentially see 17 to 18 cents? He gives us a chart here, but again, guys, this would only be short term. So XRP on the daily here. Okay, I have my line here. It's 19 cents if we do see it go lower. Of course, this is going to be predicated on Bitcoin and what it does. It's a bit of a false economy to think that any one of these cryptocurrencies are going to move independently unless there is something really, really, really big that is going on, or unless there is specific market manipulation for any one type of cryptocurrency. Otherwise, all these cryptos right now are just moving to the beat of Bitcoin, guys. I can't stress that enough. Technical analysis is important, but ultimately, we are at the mercy of Bitcoin in this nascent market. And yes, when Bitcoin hits new highs, we will definitely see XRP breach its summer high of 50 cents. Anyway, that's my opinion on that. It's all ebb and flow in the space. It's who's getting excited and who's buying what crypto. Has nothing to do with real world utility at this point in time. Guys, I saw this from XRP Joker on Twitter. That's at Joker_XRP. And guys, Christine Lagarde has now moved into a prominent role with the ECB. Lagarde is one of the most powerful women in the world, the tweet goes. She is a driving force for Ripple and XRP. She has an unthinkable amount of monetary power. It's happening. A physical reset to a new world of digitization is coming. And so Lord Lionel down here responds, it's not a physical reset, it's just freeing up liquidity and strengthening corporate balance sheets, and later may see BRICS become the new reserve currency. Regardless of what it is, the fact is clear. Christine Lagarde has the power to change monetary policy. She's got an enormous amount of power, and we know she's cryptocurrency positive and has a relationship with Ripple. Has the plumbing already been installed in Europe as well? Well, let me read you a little bit of this. A scan of analyst research notes is all that's needed to conclude investor uncertainty is running high about what to expect from the European Central Bank's final policy meeting of the year, which is also Christine Lagarde's first meeting. Money markets show no clear expectations for the future direction of interest rates. Prices currently imply a roughly 30% chance of another cut by September 2020. Benchmark German yields remain around the middle of their range over the last 2 months, and the euro's 1 month implied volatility is near a record low. In the 5 weeks since taking office, new ECB President Lagarde has given away little on her views on monetary matters. That at a time when markets are already grappling with a raft of global risks, from a growth slump to trade tensions and Brexit, which have reduced room for central banks to maneuver. So guys, we talked about this a little bit yesterday in the Basel 3 video that I did yesterday afternoon. If you guys didn't catch that one, I will again link it up here in the top right-hand corner. So I'm just going to scroll down here and read you a little bit of what some of these prominent analysts from banks are saying. So we are lukewarm on another rate cut, although pencil one in for June. While we ultimately expect that more hikes can be priced into 2021, if the market interprets a potential change to the inflation target as raising the chances of inflation overshoot, it should support a real rate curve flattener. If instead the market starts to worry about a change that renders the ECB uncomfortable with inflation settling closer to 1.5 than 2%, it will be bearish break-evens and front-end rates. So the European economy, a bit fragile as well. And guys, we talk a lot about the North American economy, the United States in particular, but all these things are tied together. Here's one of the risks from an analyst from Barclays. If the strategic review of the policy takes a long time to conclude, which is possible, and the economy shows signs of weakening, the market could quickly go back to testing the ECB's mandate credibility with disinflationary/deflationary type bull flattening again. And from TD Bank, this is one where Lagarde needs to spend most of her attention focused on establishing her credibility within the governing council rather than with the markets, as investor expectations are pretty low this time around. So guys, the sentiment obviously fairly low. The market needs fixing, and Christine Lagarde is at the helm. And let's not forget what I was talking about in yesterday's video with regards to the liquidity crisis and the ECB. By keeping interest rates negative and punishing banks for having cash, what the ECB has done is lent into real estate to get higher yields, but this type of asset cannot be sold easily, and to buying emerging market debt to get a high yield like Turkey. So guys, these are just some examples that I was mentioning in yesterday's afternoon video. So the ECB has driven banks into these markets that are notoriously illiquid. And illiquid markets need liquidity in order to survive. So what will Christine Lagarde's next move be in order to help this process along? Will she use her power to make big sweeping changes, or will she sit back, settle into the role, and make small changes down the road? We know cryptocurrency regulation is going to be a big factor in this matter. How soon will that come into play, and will that have a sweeping impact on monetary policy? Anyways, I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.